Okay, so this evening I am going to talk a bit more about that unloved UK equity market. I think what I'd like to highlight today I'm going to talk generally across our process and what I've seen in the UK market this year. And, in reference to the two investment trusts that we run within our team, which are the Aberdeen Smaller Companies Income Trust and the Standard Life Smaller Companies Trust, run by myself and my colleague Harry Nimmer. Now, these two trusts follow the same investment process, with ASCIT, as I'll refer to it, having more of an income tilt. So, this has been an incredible year for all markets, but I think what I'd like to focus on is that actually, when we see reactions like this, we often see small and mid-cap companies hit most by the market and hit most by sentiment and risk-off trades. But actually, within that, we believe that there are truly some great quality small and mid-cap companies who can survive, who can thrive. And we think that we have actually identified a lot of those this year. Our process is very much focused on stock selection and bottom-up stock picking, not on top-down macro views. Okay, so just looking briefly at what has changed this year. This is just a fun slide really to get people thinking about trends and short-term trends and how things have been changing. Now, what we're not looking to do is play these trends, and we are very much long-term sustainable investors. So what we're looking for is actually, can we identify themes as well, so that we might have seen actually structural changes this year, that have identified new long-term growth areas. And I think that there are definitely some things which come to mind. So, work from home, online shopping, business travel. I think those are all actually changes we've seen this year, which are going to reoccur, over future periods. And actually, I just wanted to talk a little bit about some themes that have become really clear to us actually through engagements with management teams. I think what's interesting about them is that, we meet companies across all sectors, but actually, quite often there are interesting common themes that have come out that we think have been key drivers this year. So just to talk through a few of those. I think the first, and actually perhaps, the most strongest such, is we do believe that the strong have got stronger and the weak have got weaker this year. And I think we see that in terms of the strong companies within sectors have really won market share. I would say that actually, recent years, there's many sort of poor companies that have survived on, economic growth and cheap finance. And actually, perhaps some of these businesses should not really have survived. I think the other thing is just balance sheet strength has really mattered this year. Those strong companies are well positioned with balance sheet, and importantly, are driven by impressive management teams. Another theme, COVID has accelerated change, absolutely. And, we've seen that across a whole range of sectors, and not just in terms of dynamics of demand, but also, operationally, how businesses are set up. One of the biggest things coming up actually is digital transformation. So I think that's something that has been on the agenda of businesses, but definitely this year, that seems to have been pushed up through the agenda and is right on the CEO type schedule now. We do have exposure to some companies which play into that theme. Another theme I'd play is the ESG theme. And I think actually, truly, we have seen this year that companies with strong ESG credentials, that has really been to their benefit this year. I think that's come through in a range of aspects. One of which I'd actually think is the culture of businesses and sort of the treatment of employees and how companies have thought about all stakeholders actually. Relationships matter. So we've seen this across a range of companies whereby, if you look through where they are in their industry and their sector and their supply chain, the strength of their relationships have really got them through well this year. And the last theme I wanted to mention was just, we think the recovery is really more about the high street than it actually is Wall Street. And what I mean by that is this has been a scenario this year that every individual has been impacted by in some way. And I think that differs quite a lot from other recessions, which perhaps have been more financial market driven. Okay, just briefly to go through our investment process. Hopefully a lot of you on the call will be aware of our team and the process we run, but just to bring the others to light. Okay, so the process within our team, and this is true across all the UK, European and global funds that we run, the process is identical, and it is focused on quality, growth, and momentum. We want to take a lower risk approach to investing in this universe, and we do that particularly through our focus on quality. We're looking at those sort of risk-adjusted returns, and really the quality aspect has that resilience of our process through tough periods. Looking for sustainable growth businesses. So these are not companies which have, a short-term growth spurt. This is looking at how these businesses can sustain growth rates year after year. When we look at momentum, we're looking to run our winners. That's a real focus of our philosophy. But importantly, that momentum also being driven by earnings upgrades, earnings momentum. We use our in-house stock screening tool, the Matrix, to really focus down our research efforts on identifying within the universe, which stocks fit our investment process. We're long-term investors, so we tend to think about a 3 to 5 year time horizon when looking at new investments. Management quality I'll come on to more, but really key aspects of our process is trying to identify what we think are strong management teams. And lastly, valuation aware. So valuation is a factor within every one of our investment decisions, but it is somewhat secondary to us in that we are not scared to pay up a high multiple for a quality growth business. Okay, I thought it might be interesting to look at what has actually happened this year in terms of earnings in the UK. I think if we look back into 2019, we were definitely going through a period where economic growth was slowing. We had the entrance to recession really, but COVID has just completely changed that environment in terms of the sharp impact we saw. And this is actually something that I think we've probably never seen in markets before in terms of the degree of correction in earnings forecasts and how rapid that was driven by lockdown. But I think across the market in FTSE 250, earnings have fallen about 57% since the start of the year. That's a little bit more than FTSE 100, where I think earnings have fallen about 47%. We were seeing signs, and you can see that in the lines on this chart, signs of stabilisation of earnings. Now, I think there's still uncertainty. We are in sort of somewhat of a second lockdown period, and where those go, I think, is still to be seen. If we look at the trend lines here in terms of 2020, 21, and 22, I think what's interesting is actually because earnings have fallen so rapidly, we are going to see actually strong earnings growth rates year on year going forward. But my opinion is we are in an environment where the economy is going to be tough over the next couple of years. I think that makes actually top-down views and decisions quite difficult. And for our process, really, we never take those top-down views. So we're very much focusing on the company level. Okay, so across our portfolios, though, what have we seen happen to earnings? Well, I'm pleased to say that given our focus on quality and also our focus on being able to identify growth businesses who can grow despite what might be happening externally, our portfolio earnings have been held up better than the market. So we think portfolio earnings across these two trusts have fallen about 30% this year, which is probably about half of the fall in FTSE 250. We definitely aren't immune, but if you look at the sort of direction of forecasts of some of our top holdings across these two trusts, it's great that we've actually been able to see some companies who have driven fairly significant earnings upgrades this year. I'm sure many of you in the call will be pleased to see AJ Bell in there. Very resilient business, actually, earnings higher now for this year than they were at the start of the year. I think just to pull again, our growth focus. So, we have tried to identify in this list of companies, businesses where we do think they have strong management teams who have actually been able to adapt the businesses, continue to grow despite those headwinds. And actually some of these businesses as well, I'd like to say, play into some of those themes that I mentioned earlier. The strong getting stronger and the weak getting weaker. That's definitely something that I would highlight across a range of these names. The digital transformation angle that I talked about, Kainos is a company which really plays into that theme. Again, acceleration of change as well throughout these businesses. And the last one, I talked earlier about relationships matter. I pull out companies, for instance, like Hilton Food Group here, like Gamma Communications. Businesses which the strength of their relationship with their supply chain, with their partners, with their customers, has really put them in a strong position this year. Okay, so what do we think about when we're talking about a quality company? I think it's important because different people sort of define words like this differently. So just to look at some of the characteristics that I'm looking for when I'm doing that fundamental research. We look to invest in businesses, importantly, which are profitable. So it's not just growth at any cost, really it is about profitable businesses. Really important to our investment process is the strength of balance sheets. I think that in particular this year actually has come through in terms of, the market has definitely looked towards resilient balance sheet companies. Companies with good returns on capital, attractive margins, businesses which therefore can continue to invest and even acquire actually when others might be struggling. We look for companies with strong market positions. Management pedigree is really interesting because, I think it's something which actually, it's easy to say you back high quality management teams, but it's actually one of the most challenging things to identify, I think. And I do think that as a team, we have a strong track record of doing that. And that comes through our ability to engage with those management teams. So we will meet all of the businesses that we invest in at least twice a year. And actually this year it's been more than that. In the UK as well, particularly, actually true across all our portfolios, we actually do like to back founder-run businesses as well. And the last one, ESG, so corporate governance and stewardship, environmental, social aspects. These are truly embedded in our research process, right from every meeting we have with management teams and are really core to our quality focus. This focus on quality allows us really to have that lower risk approach towards investing in this space. I just want to touch a bit more on ESG. For us, when we're looking at that ESG research and really embedding it, we're not just looking at risks, we're also looking at opportunities. And we think that's really important. Just a few things here where some people might see risks and we see opportunities. The first is that founder, owner managed businesses that I talked about. Some areas of the market think that's a negative. For us, we actually really like founder-run businesses. We think those founders are aligned with us, not just by their shareholdings, but also their attitudes. Founders tend to think about the next 3 to 5 years. They don't think about the next quarter. It's very much the same time horizon as we have. We think a lot of small and mid-cap businesses actually have limited ESG resources internally. I think that's where we, Aberdeen Standard Investments, have the ability and the opportunity to engage with those businesses and help them improve their ESG reporting. A lot of companies actually talk to us about, they think they are doing a lot of positive ESG characteristics internally, but don't really know how to bring that to the market. And the last thing I'd highlight is just ESG research. I think is still an underdeveloped market. And when I look at, companies which aren't rated, where, we maybe disagree with some of the outcomes of some of their research, I think it's a real opportunity where our investment internally has allowed us to really, engage with them on ESG and really, we think, do some value add ESG research. And just briefly, I wanted to look at, across these two portfolios, some of the businesses where, we invest in that we think are doing a lot of positive ESG aspects. I'll just pull out sort of Kainos and the Hollywood Bowl, really on that social aspect in terms of their involvement with charities, with learning and development, with training. I think that's really important. And I think also that really helps the culture of the business internally as well. And then we have other businesses such as Strix. And these are companies which, for instance, actually in terms of their products, are really driving ESG improvements. They are delivering products which are helping to sanitize water, products which importantly are reducing plastic usage, sustainable products, energy efficiency. And we really do see a huge amount of positive ESG characteristics across our investments. Okay, just looking at that quality and growth investment we're looking to make, what does the earnings profile of one of these businesses look like? These are just some earnings charts that I've showed you here. I refer to them really unscientifically as wiggly worm charts. And what we're looking for in a quality growth business is, ideally a business which is resilient, which does not have a huge amount of cyclicality, where earnings are growing year on year on year. And dependent on the nature of the business as well, we do like to invest in businesses where there's a visibility in that revenue stream. Games Workshop's a good example actually, where if I had this chart dating back longer, you would have seen that actually this business didn't really have any earnings growth. And it's a good aspect where actually a new management team came in and really reinvigorated the business. And then in recent years, we've seen that momentum of earnings growth improve. How do quality portfolios perform? Okay, so two things I pull out here actually. One is I'd just like to talk about downside capture. Because I think if you look across these two trusts, that's a really important factor. We like to have attractive downside capture numbers, which protects our end investment and investor and client in more difficult market environments. This is also just some data here from Peel Hunt, so sort of independent data that looks at the characteristics that we look to invest in. So, growth, earnings momentum, quality. And you can see over the long term, all of these factors significantly outperform value. And looking back, so this is data actually from our UK Smaller Companies Fund, our ROIC. But like I said, all the funds in the team are run under exactly the same investment process. But I think this is a really interesting example of the long-term dynamics of our investment process. So you can see here, over the long term, we have delivered significant outperformance through our process within the UK small and mid-cap space. There are periods that our process struggles in, and I would highlight those in particular as recovery rallies, when value stocks are doing well, real risk on trade. That doesn't play into our focus. But importantly, if we look over the long term, those periods have actually been quite short in nature. Actually, where our process does very well is in more difficult market environments. You can see on a relative basis, because of our focus on quality, in that downside capture number, actually in bear markets, challenging environments, we think we do well. Okay, so just to summarize, within our team, we run two investment trusts focused on this space. So the Standard Life UK Smaller Companies Trust and the Aberdeen Smaller Companies Income Trust, both on the same process, but ask it with more of an income bias. We run them under this process, which now has been run for over 20 years in the UK by our team. And what we think is really important is that has been tried and tested through 4 economic cycles now. Our process is all about bottom-up fundamental research, assisted by our matrix tool, and that really allows us to have a small dedicated team, who really are narrowing down and focusing our research efforts on the stocks that are most applicable for that process. We look to run quite concentrated portfolios to around 50 stocks. And really important for us is that we're focusing on delivering significant outperformance, but in a lower risk manner. Thanks very much.